Hey warriors, I hope you're all doing great. This is your friend Rahul Agarwal and I'm back with the video on a quick paper review of your CMA final direct tax paper for December 2025 examinations. I know I'm running a little late because it's already been a week since the paper has come out, but yes, I was occupied with a little bit of a commitments from my side. I was able to finish the intermediate, but the finals were still pending. Nevertheless, better late than never. Let's quickly review this paper as well and let's understand how the paper looks like. Now, before I start reviewing this paper, a quick request from my side to all of you. For those people who've written December 2025 examinations, do not use this review as a guide means to understand how your paper has been performed and whether you should start preparing once again or not. People, you've already done your paper. It's time for you to focus on something else. You've already spent too much of amount of your time getting into this paper analysis, preparing for your examinations. So now it's time for you to relax and take a little bit of a breather before you start preparing once again, in case you do want to do that. For all of my friends who are writing June 2026, yes, this paper is definitely a good paper for you to look into along with me, because it will give you an understanding on how your ICMA is preparing their papers and how you should be preparing for your examinations as well. Yes, on that understanding is what we're going to do this paper. So let's not waste any more time and let's quickly get into this paper analysis. Shall we? Yes? Good. Let's look into all the questions, people. As I keep marking the questions, I'll also keep telling you whether it was tough and easy from a student perspective and should you be able to answer it or not be able to answer it. First one, the question says, I'm Mr. Dr. Vinayak, a reputed medical doctor and as a non-resident. The gross profit from profession, the gross receipts from professions are given to you at a price of rupees 12 lakhs and the total income computed for the current year is 2 lakhs. Notice carefully, people, that my current year's total income is 2 lakhs, which means less than basic exemption limit. At the same time, my gross receipts have exceeded 10 lakh rupees, which is a mandate requirement for filing of returns. By that logic, question says there is no TDS credit showing in the question. Which of the following is regards correct to the return filing provisions? First one says he does not have to file his return of income as he does not exceed basic exemption limit. No, he has to file his return of income since he has he has to file a return since he is a non-resident. No, he does not have to file a return since no TDS was deducted. No, and he has to compulsorily file his return of income since the gross receipts from profession exceeded 10 lakh rupees. Yes, this is the right answer. This is the right answer. People, there is a specific guidelines under 139(1) which comes and says when a person has a gross receipts from India profession more than 10 lakh rupees, he mandatory has to file a return of income in India even if his basic exemption limit is not exceeded of. So option number D gives me the right answer. Yes, I think this one was an easy question. If you have done the 139(1) properly, you should have been able to easily answer this question of fairly adjustable question. Yes, good. Question number 2 says, I am MNO LLP Mumbai furnishing the return of income for 25-26 before the specified due date and have declared an income of 1,20,000. So my income declaration has been 1,20,000 from my side. The assessment was completed on 10th February 2026 and the total income has been declared as 1,65,000. Officer has computed 1,65,000. There was no advance tax or TDS credit available to the assessee. Okay. How much is the amount of interest payable under section 234B of the Act? So 234B has been requested. People, for those who remember, 234B comes and says that you need to levy an interest at the rate of 1% per month or part thereof from the 1st April of the assessment year until you make the final payments of. Now, this question has a little bit of a challenge, people. We need to understand the question carefully before you make a statement. First, let me do one thing. Let me come and tell you how much 234B should have come if I had filed my return properly. I have filed my return properly. Because I'm filing my return properly, my total income in the return has been confirmed as 1,20,000 rupees. How much tax am I going to pay on this? Help me out quickly with me. 1,20,000 is my income multiplied with 30% because this is partnership firm. Adding a 4% says answer gives me 37,440. Now on this, if I have to levy interest, because a single rupee advance tax was also not paid, I'm going to levy 1% interest for April, May, June, July, August, September and October. 7 months I'm going to levy because the question says before the specified due date. So let's multiply for 7 months. The answer is going to be 2621. It's coming 2620.8, but I'm just rounding it off. Yes. Now let's look at what the assessing officer is proposing. Officer is proposing that my total income is going to be 1,65,000. With my total income being 1,65,000, I'm again going to multiply 30%. I'm going to add a 4%. Says the answer is going to be 51480. Now, notice carefully, assessing officer order is coming in the month of February, which means after October also, November, December, January, February, 4 more months are going to be included. By that logic, where here I am going to do interest for the person for 7 months, There I'm going to do interest for 11 months. Yes, so let's compute interest for 11 months into 1% into 11 months. Answer is going to give me 5663. 5663. Now, two things can happen, people. One thing is, the problem with the question is the question does not clarify when do they want this interest pertaining to. First, you can come and say that I want interest pertaining to whatever is as per the assessment order, in which case the answer is straight out 5663, and I'm going to say the answer is option B. However, question can also mean to say how much additional interest do I have to pay from what I already paid in my return. If I ask you that question, then what is going to be my additional income? Which means I am going to show 5663 minus 2621. The answer is 3042. The answer is 3042. 3042 does not show anywhere. Because 3042 is not showing anywhere, the answer will outright become 5663. This is what the answer is. Yes. Now, they could have been a little more clearer on this question, people, and you could have got this answer a little more easier. Unnecessary, you have to waste time doing the return of income related interest also, which was not required. Or even if for that matter, they did not even have to give you this thing. They could have not even given you the 1,20,000 and you would have still got the right answer. Yes. Unnecessary confusion being created in exam, but yes, 5663 is the right answer for all of you. Clear? Yes. Good enough. Next one says, what is the rate of tax on income transfer from virtual digital asset? I think this is the easiest question you could have got. Straightforward answer is your 30%. You do not even have to ask on it. Yes. So this one was an easy question. Next one says, an apartment was acquired by Kantilal for 50 lakh rupees in Singapore on 19th August 2016. He was in India for more than 2 decades before he left India permanently in April 2017. Only 60% of the purchase price was disclosed to tax authorities in India. I have decided to only disclose 60% of the number. The fact of non-disclosure of full amount of purchase price came to the knowledge of assessing officer in the month of Jan 2025. So I have now found it in Jan 2025 that this person has not disclosed enough number when the fair market value was 200 lakhs. How much would be the income tax under black money scheme? Now people, even if you have not read black money, this is the most easiest question you can answer. You know you are going to offer to tax 200 lakhs. But when you're going to offer 200 lakhs, what will you say? Sir, out of the 200 lakhs, 60% I had already disclosed in the past year. Why should I tax on that? I'm only going to tax you the 40%, which means straightforward, I'm going to say 200 lakhs is what officer is found out. In that 60% already offered, 40% is what I'm going to offer right now. Answer is simple, straightforward, 80 lakhs. That's it. Yes, this is the easiest question you can answer, people. Even if you did not know income tax, if you know basic maths, you could have got the answer. I don't think this can be tougher at any point of time. Easy question. Next, during the course of assessment of Sheila & Co., it was found that bogus purchases of entries were made for 5 lakh rupees in the accounts of books. Even after bogus purchases, the assessing officer's total income was only one item, which is a business loss of rupees 2 lakhs. How much is the amount of penalty leviable? Now, this is a trick question, but if you have done this properly, you could have got this very easily, people. There are two laws in India. One is called Section 270A and one is called Section 271 AAD. Yes, now 270A comes and says underreporting of income and misreporting of income. In this facts question itself has come and told you that the income is at a business loss of 2 lakhs, which means definitely underreporting is not happening. But 271 AAD comes and says that when you have any kind of bogus false entries recorded in books of accounts, then 100% of the false entry recorded in the books of accounts will be levied as penalty to you. Therefore, 5 lakh rupees of bogus entry in your books will become a 5 lakh worth of penalty. Will become a 5 lakh worth of penalty. I think this one was easy, people. You should have not made a mistake on this. You just had to record the 5 lakh rupees as it is. So 5 lakh rupees is the penalty levied on you. Full stop. That's it. Simple, straightforward. Yes, good. Next one question says, a survey under section 133A was conducted in the business premises of AB & Co. Which of the following powers could not be exercised by income tax authority on the said survey? The highlight part here is that this is a survey. It is not a raid. It is not a search. In a survey, a person can only come and inspect data. Let's check which one is right. It says seizing cash not recorded in books of accounts. I think this itself is the answer, people, because when it comes to survey cannot seize anything. They can only verify information. They cannot take over anything and go back, which means that is not permitted. Recording statements of any partner who's not present at the premises, yes, you can do that. Verifying cash and accounts, you can do that. Place identification marks also can be done, which means the balance three things are something which you can do during survey. The first things is what you cannot do. Straightforward, easy question, people. Yes, should not have been a rocket science here. You should have been able to get this one easily enough. Good. Next one says, what is the monetary limit of tax effect of department to file an appeal? I remember telling this in the class as well. This was an amendment of current year and therefore will be expected in examinations. The amendments of the current year comes and clarifies that if you want to file an appeal, if department wants to further file appeal, then it was 60 lakh rupees notified for ITAT. It was 2 crore rupees notified for High Court, and it was 5 crore rupees which was notified for Supreme Court. By that logic, people, the answer is straightforward, 2 crore rupees. Easy. Yes, if you have read the amendments properly, you should have easily got this answer. This should have not been difficult. Yes, yes, good. The next one is Allen Private Limited furnishing the following information for securities held as stock in trade. What would be the cost of acquisition as per ICDS number 8? I remember giving this example in the book and I also discussed this in the class as well, people. There is one subtle difference between ICDS and your normal accounting standards is that ICDS requires that you will calculate cost or NRV on the total worth of the assets in the same nature, which means I'm going to take all equity shares and I'm going to add it together. I'm going to take all debt securities and I'm going to add it together, which means equity instruments are going to show 2,300 and 2,100. Whichever is lower, answer becomes 2,100. Here it is going to show 2,500 or 3,400, whichever is lower, which means the answer is going to show 2,500. By adding these two, the answer is automatically going to become 4,600. Simple, straightforward. Yes, if you've paid a little bit of an attention to ICDS, you would have easily got this question of people. There was no difficulty in this question whatsoever. Yes, good. Next one says, Ramesh has sold his residential house for 80 lakh rupees and a long-term capital gains of 55 lakh rupees was computed upon. He purchased capital gains bond for 50 lakh rupees before the end of the previous year. People, capital gains bond makes you eligible for section 54 EC. What would you call the action of Ramesh as regards acquisition of capital bond? What will you call it? Department itself wanted you to invest the money and get 50 lakhs worth of deduction. You've got the 50 lakhs worth of deduction. You're doing what department asks. Simple, straightforward. Tax planning is the answer. Yes, how easy can the question be? Straightforward, easy question. Yes, last couple of questions. It says, which method is generally considered as most appropriate method of ALP in case of transfer of unique intangibles? I'm going to transfer unique intangibles. Now this is a theoretical question, but transferring unique intangibles makes you eligible only for profit split method. Profit split method is the right answer. I think this was a moderate one. If you've read ALP properly, then you would have got this answer. Otherwise this could have become a challenge for you. Yes, next one. It says, PQR Limited has been supplying goods to its associated enterprise in a foreign country. It has applied for APA provisions in respect of transactions with the E, which amounted to 150 crores. I am going to apply for 150 crores worth of transactions. How much is the fees that is payable for APA? APA, we remembered, people, it is 100, 200 and about 200, 10, 15, 20, which means less than 100 it's going to be 10, 100 to 200 is going to be 15, and after that it's going to be 20. This is 150 crores, which means the answer is simple, straightforward, going to be 15 lakh rupees. I'm not going to mark this as easy because I know this could have gone wrong for you. Yes, probably, people, not everyone remembers the fees and goes. If you have remembered, what is the meaning of safe harbor? A seaport where it is safe for ships to income tax is going to ask you all that nonsense. Circumstances in which income tax authority shall accept the transfer price as declared by the assessee. This is the right answer. This is the right answer. Simple, straightforward. A fixed percentage of net income to gross sales admitted. There is no reason for any transfer pricing adjustment. No. A fixed percentage of equity shareholding which entities are not treated as associated enterprise. No. Answer is option B. I mean, it's an amendment, people. I know you would have focused more on the percentages of the safe harbor rules, but if you focused on the definition, you could have easily got this answer. I don't think this should have been difficult. Even by looking at the question, you could have given the right answer here. Yes, look, Lakshmi, a resident individual, earned 35 lakhs as consultancy income in country Y, on which she has paid tax in country Y at the rate of 20%. She has already paid tax in that country at 20%. Okay. Country Y does not have a DTAA with India. Okay. She wants to know whether she can claim any relief. Yes, obviously. Section 91 gives you the relief. Lakshmi will not be able to claim any relief. No. Lakshmi will be able to claim relief of tax paid in country Y only if country Y provides tax credit to its resident in respect of country. Abdila condition. Lakshmi will be able to get relief of country Y even though there is no DTAA. Yes, this is the answer. Simple, straightforward. Simple, straightforward answer. Easy, nothing else. EG, only EG. Which of the following articles is present in UN model but absent in OECD convention model? Okay, people, I can agree to the fact this is something which you would have not read and gone for exam, including any faculty. No faculty teaches this topic also. It's a very standoff question. If you've gone through your material and you were lucky enough, you will know the answer is actually article number 14. The answer is actually article number 14. Unfortunate enough. If you know, great. If you don't know, it's okay. 2 marks, not a big deal. Leave it off. The assessing officer of ABC Limited finds a transaction to be impermissible avoidance transaction. The principal commissioner has made a reference to approving panel after complying with the legal provisions. What is the time limit given for approving panel? It's always 6 months, people. But the only question is it 6 months from the date of reference or 6 months from the end of the month? When it comes to assessing officer, the answer is always 6 months from the end of the month. It is never going to be 6 months from it as it is, people. 6 months and all is for you, not for the department. Department will always take the end of the month, end of the year, end of the quarter. That is how it is going to operate. So answer is always going to be point number D. Should be manageable, should not have been difficult. Yes, good. So if I'm looking at my MCQs, I think one and probably yeah, I think I have marked 3 and then other 4, I think. Yeah, 4 MCQs have marked as difficult, people. 234B, again, honestly speaking, ICMA should definitely give you grace marks on that. If they don't give it, unfortunate enough. For 2 reasons, people. One is definitely, yes, this is something which they have kept it vague. Second of all, if you come and ask me, actually the answer is not 5663 also. This is itself wrong. 234B has a mandate that when you talk about 234B interest, it is always calculated on the number rounded down to the nearest 100, which means it was never 1,65,000 into 30% plus 4% is 51480. You should have never done it on 51480. You should have done it on 51400, which means 51400 pay 1% into 11 months. I think it was 11 months. Yes, answer is 5654. 5654 is the answer. I don't see that option itself, which means technically that answer itself is wrong. I really hope ICMA gives you grace marks on that. Should give you grace marks on that. Yes, but nevertheless, that is what the question looks like, people, and that is how MCQs are getting over. Any doubts? Perfect. 16 minutes, we are able to done 30 MCQs in 16 minutes, 30 marks MCQs in 16 minutes, already a good sign. Yes, let's look at the theory questions now. Let's see if you're able to answer the descriptive questions. Question says they want you to answer any 5 questions out of 2 to 8, which means I have 2, 3, 4, 5, 6, 7, 8. I have 6 questions in my hand and I have to answer 5. 2, 3, 4, 5, 6, 7, 8. 7 questions I have, sorry, 7 questions I have and I have to answer only 5, which means 2 questions are a bonus. I can ignore 2 questions for me. Let's see which questions I'm going to ignore first of all. 2A says, I am Sitaraman Charitable Trust registered under 12AB running a hospital and nursing college. Trust is following cash system of accounting. Very, very important. The following information is given to you for the current data. You are required to calculate the total income of Sitaraman Charitable Trust by giving brief reasons for treatment of each item. Also suggest any possibility of avoiding tax liability as a major portion of receipts that were realized at the end of the year. People, charitable organization, I discussed in the class in detail, but yes, we also did clarify to you that it is not something which comes very frequently. Yet, we have done the easiest of the questions of charitable organization, where I told you the simple, straightforward trick is take the gross receipts, reduce 15%, whatever expenses you have paid, whether it is revenue or capital, simply claim it as reduction. By that logic, I am really hoping you would have been able to answer this question off. Let's see. First one says, my gross receipts is 540 lakhs, straightforward, add to income statement. Gross receipts of nursing college to be added to income statement. Fees which could not be realized from patients, ignore. Why ignore, people? Because the question says you're following cash system of accounting. Cash system of accounting means I'm not going to record anything which is not been received in my hand. Ignore statement. Administrative expenses of hospital to be reduced later on. Administrative expenses of nursing college to be reduced later on. Acquisition of building for the purpose of purchase. People, any kind of purchase made, whether purchase of capital or revenue, can be claimed as application. Corpus donation included in gross receipts of hospital given above. Corpus donation, we discussed, will always be exempt from tax provided they invest in 11.5 modes. Nothing is mentioned to me. I'm going to assume that they're going to invest in 11.5 modes, which means 540 is going to have a knockoff of 8 right now. I am not going to be taxing 540. I'm only going to be taxing 532. Next, repayment of loan taken during the financial year for repairs of hospital allowed. Loans taken are not allowed as application. Loans paid off are allowed as application. Administrative expenses includes payment of rupees 5 lakhs, which has happened to James, a non-resident person, for training doctors of the hospitals which are run by the trust. No tax was deducted. Section 40AI. Section 40AI says any payment made to non-resident without deduction of tax at source will make you disallowance 100%, which means hospital administrative expenses are wrong. Hospital administrative expenses will reduce 95 lakhs and then claim the balance as a deduction. Next, the trust expresses their inability to apply the entire income for the objects of the trust as the major portion of the receipts were realized at the end of the year. This is, I think, the second half of the question. We'll discuss what to do with this. Let's figure out the answer here. What is the answer, people? I'm going to have 532 plus 168. So let's take 532 plus 168. What is it? 532 plus 168. Answer gives me 700. Reduce 15 percentage. I think this should be 105. 15 percentage is 105. Yes, the answer is 595. In this 595, I'm going to start claiming my deductions. One is 90 lakh rupees, which is coming from here. One is 76 lakh rupees, which is coming from here. One is 215 lakh rupees, which is coming from here. One is 4 lakh rupees, which is coming from here. Anything else? No, nothing else. Yes, this is my numbers. So let's take the number down. 595 minus 90 minus 76 minus 215 minus 4 gives me the answer as 210 lakhs. Yes, so 210 lakhs will become my total income. So the question asking what is the total income? Simple, 210 lakhs. Also suggest any possibility of avoiding tax liability as major portion of the receipts were realized at the end of the year. Do you have an option? Yes, we have an option called as deemed application. Deemed application basically comes and says that when the money is received at the very end of the year and you're not having sufficient time to apply it, you can go and approach the assessing officer by filing a form. Once you file a form, you can inform the assessing officer to treat it as application in the current year itself, provided you make a promise that you are applying this money in the exact subsequent year. So in the next immediate year, if you're going to apply this money, then in that case, in the current year, I will treat it as deemed application. Yes. So what is the remedy available here, people? Please approach assessing officer, file a form, get this as deemed application in the current year with the promise that you will apply this money in the immediately succeeding year, which is assessment year 26-27. Yes, that is what the answer is. Easy charitable interest question, people. I think you should have been able to answer this question. If you have spent a little bit of a time on the charitable trust chapter, you could have easily got this answer off. Yes, good. Next one says, I am Vijaya Sharma and Mohan are partners by the name BSM and Co at Delhi. They are sharing profit and losses equally. Okay, partnership firm. Firm is engaged in manufacturing activity. Partner Mohan retired on 31st August 2024. Oh shit. We are getting into something very difficult, people. Something called as 45-4. Yes, 45-4 is going to be discussed upon. Something which I told in the class also. Please skip. And luckily for you, charitable trust anyway, most of the people would have not read, which means this question I have already guaranteed for myself. I am going to skip. Go for it. Net profit up to that date is given as 4.5 lakhs, which means net profit of 4.5 lakhs is computed for the firm. Capital of Mohan on that date is given as 35 lakhs. This is my partner's capital. For the purpose of settlement of account of Mohan, the firm has transferred its stock in trade at the cost price of 8 lakh rupees when the regular price was 9.5 lakh rupees. I am also going to have 9B coming into picture. PGBP is also coming into picture. The firm has transferred a plot of land to partner Mohan, which was acquired in the financial year 2021 for 12 lakh rupees when the stamp duty value was 30 lakh rupees. 45-4 is also come into picture. The balance amount of capital due to Mohan was paid by cash or check. Now, this is where the problem is. When you say balance amount, what do you mean by the balance amount? It says balance amount of capital. Appo, do you mean that whatever profit was made till 31st August was not paid to them? Question number one. Question number two, now you're going to make into computations. You're going to take stock in trade, you're going to take capital gains, all that computations you're going to make. Whatever profits you get from the transaction, that is also going to be allocated to the capital. Appo, should that also be paid off or not is the big question coming up right now. Yes, people, a vague question like this is not even accepted. It's a very horrible thing which is happening in the institute. You're not supposed to accept these kind of questions. This is wrong. Writing the word balance amount does not make any difference. What do you mean by balance amount? I can make an assumption right now to come and say balance amount here means that I'm only going to pay 30 lakhs. I'm not going to pay a single rupee of net profit. Option number two, you can come and say, no, why should I take only 30 lakhs? The partner worked till 31st August, so give him the profit share also. But then I'll come and say, if you remember accounting people, accounting comes and says when retirement of partner happens, all assets are going to be revalued. When all the assets are going to be revalued, that profit is also to be allocated to the partner. Are you going to take that also into consideration in the question? Yes, weird questions, all these kind of weird adjustments does not make any sense. Yes or no? Yes, but weird people. I don't know how to answer this question, but I'm going to leave it at some point. At some point, I'm going to leave the question. I'm going to leave it there and I'm not going to answer it any further because I don't have clear information in my hand. To a certain extent, which I can answer, let's talk about it. First is, when I'm talking about sale of stock, people, stock is being sold to the partner. Income tax 9B comes and says when anything has been sold to the partner, it is assumed that it is profit of the firm. So stock in trade is going to be sold off. Sale price is given as 9.5 lakhs. The cost price is given as 8 lakhs. Which means I'm going to have a 1.5 lakhs worth of profit. This 1.5 lakhs worth of profit will be have to pay tax in the hands of the firm under the head PGBP. Firm has to pay tax at the rate of 30%. Second, I'm going to look into my stock, my land sale. My land sale, my stamp duty value is given as 30 lakhs. My cost of acquisition is given to at 12 lakhs, which means my capital gains is going to be 18 lakhs. Now 18 lakhs, people, question says that the asset has been transferred on, when is the retirement taking place? Retirement is taking place after August, I think. Yes, the retirement is taking place after August because the question says it is on 1st September, which means I'm going to take it post 23rd July. Post 23rd July makes you liable for LTCG under section 112, and 112 comes and says that I'm going to tax it at the rate of 12.5 percentage. So it is going to be 18 into 12.5 percentage. Yes, till here I can answer the question. Till here this is fine. The problem comes now to look at the partner. People looking at the partner. Partner is going to do what? Partner is going to come and say my opening capital balance is given as 35 lakhs. I think so. My partner is going to say my capital balance is 35 lakhs, plus in the current year he has some share of profit. So share of profit is already assigned to me. Share of profit is 4.5 lakhs, and that is for all partners put together, which means his partnership share will be 1/3, which is going to be 1.5 lakhs. Next comes the question, when it comes to CG, people, any kind of gains that you send to the partner, whatever profit you make from the transaction, net of paying tax has to be allocated to the partners in the profit sharing ratio. We did it as a part of the computation, if you remember. So what is going to happen? I'm going to take 18 lakhs multiplied by 12.5 percentage plus 4 percentage, 2.34 lakhs. 2.34 lakhs is going to be split between all the partners. I only need Mohan, so therefore partner is 0.78. No, 1 second, sorry. So it's going to be 18 lakhs multiplied by 12.5 percentage plus 4 percentage is going to be 2.34 lakhs of tax. This 2.34 lakhs of tax is going to be reduced from the 18 lakhs worth of tax. So 15.66 is the total profit. Total profit of 15.66 lakhs which the partnership firm has made has to be divided between all the three partners in the ratio of 5.22. 5.22 lakhs is going to be allocated off. Similarly, people, what is going to happen? I am not, should I take the stock in trade as a question? Because the question says, for the purpose of settlement of the accounts of retiring partner, the firm transferred stock in trade at the cost price, which is 8 lakhs. They did not say off a cost price, at the cost price, which means question is coming and saying, I'm going to sell it at the cost price of 8 lakh rupees, which means firm is technically not going to make any profit. Although yes, they had to sell it at regular price of 9.5, but the firm has decided to settle the accounts at 8 lakh rupees. That is what I'm understanding in this question. Yes. So by that logic, people, I don't know what to do with this understanding. My probable assumption will be that because firm has not made any PGBP profit in accounting terms, but still has to pay tax on it because 9B requires, the tax component of the stock in trade has to be reduced. Yes or no? Because I'm going to sell it at 8 lakhs only. My stock is also showing 8 lakhs. I'm going to sell it at 8 lakhs. There is no profit, no loss for my transaction. But I still have to pay tax of that 1.5 lakhs. So 1.5 lakhs of tax, I'm going to have 30 percentage plus 4 percentage cess, which is going to be 0.468. This is to be divided between three partners. The answer is 15,600. Yes, this is what, if you come and ask me, should be the capital contribution of the partner. This is what I would say is the right answer. It's such a vague question that you don't even know the right answer here. So 35 lakhs plus 1,50,000 plus 5,22,000. Oh, 5,22,000. Yeah, sorry. 35 lakhs plus 1,50,000 plus 5,22,000 minus 15,600 is the answer, which means answer will be 41,56,400. Yes. Now the question comes and says, how are you going to settle the partner? Now the question itself is so vague because the question comes and says, I'm going to settle the partner by giving some things. First, the question comes and says, I'm going to give him a land. So land is going to be sold at a partnership price of rupees 30 lakhs because that is what the question has come and confirmed to you. So 30 lakhs worth of sale made, good enough. Next, can I take stock? No, because stock is not relevant because capital gains computation comes and says, I don't care about the stock. So ignore it off. Next, the problem comes and says, is that they're going to say the balance amount of capital due was paid by cash or check, which means I'm going to assume that in this land, 8 lakh rupees from accounting perspective was settled off. But from income tax, I'm going to ignore off. The balance is going to be settled in the form of cash. So which means what am I going to do? If I'm going to take 4156 and I'm going to reduce 38 lakhs from the conversation, then 3,56,400 is what I'm going to give as cash, which means the total payment of money which has come to the partner is going to be 33,56,400. However, the capital is showing 41 lakh 56,000, which is technically nothing but the 8 lakh rupees minus the 1 lakh 50,000. Yes, that is what the difference is going to show. But whatever that is, the point is at this stage, this is what the number is showing, which means the partnership capital ratio is going to show a loss. And when it shows loss, income tax says you are going to report it as nil. You're going to report it as nil. This is what I think is the most logical assumption of the question. This has a lot of mistakes in the question. Very, very vague question given to you is what I would say. Yes, best to avoid this question is what I would request. 7 marks, people. I know 7 marks, good number, big number, but hey, you have 2 questions to ignore off, and if you have anyway ignored of charitable trust, you're definitely going to ignore off this also, which means I don't think you should have answered this question. Nevertheless, yes, you should have still been able to score a good amount of marks nevertheless from this question. So let's skip it off. But hey, if the question comes and this is what the answer is, if you do have a suggested answer, a different way of doing it, let me know, people. I'm happy to look into it, but this is what I think should be the most appropriate answer from the exam perspective. Yes, good. Next one says, Mr. Sridhar is a resident individual furnishing the following particulars of his income. Question says, I have a business income of 17 lakh rupees. I have long-term capital gains of 1,20,000 rupees. Sale is made in March 2025 after 23rd July. Paid life insurance premium of 1,50,000 on 3rd January 2025. Policy was taken on self on April 2022. Sum assured is 12 lakh rupees. People section 80C will come into picture, allowing you a deduction of 10%. Paid 2 lakh rupees to Prime Minister National Relief Fund. I discussed this in class. I told you when you don't remember the ATG, the rules is very simple. When you see Minister and National both together, 50 and 50 becomes 100%. So this is going to be 100% allowed as deduction to you under section 80G. Assess the tax liability of Sridhar under default tax regime and alternate tax regime. Suggest which one should be opted for. I think this is the easiest question you can get, people. EG question is given to you. Let's quickly finish it off. What am I going to do? I'm simply going to come and prepare 2 columns. One is called ATR and one is called DTR. ATR comes and talks about PGBP. Numbers are 17 lakhs on both the sides. Next, I have LTCG given to me in the question, I see. Yes, so LTCG is given to me in the question of 1,20,000 rupees. Now, honestly, people, 1,20,000 worth of LTCG is going to be straightforward ignored off, because up to 1,25,000, you're anyway not liable to tax. Yes, LTCG under section 112A is not even liable for tax up to 1,25,000, which means on this LTCG, I'm not even going to pay a single rupee tax. Next one, I am going to pay a premium, life insurance premium, which means I can total this number right away, people. Total number is 18,20,000. Next, I'm going to apply ATC on this. So let's apply ATC. What is the provision, people? It is 12 lakh rupees. 12 lakh rupees per 10% will give me what? 1,20,000. I've paid 1,50,000. I can only claim 1,20,000. That too under ATR. So ATR is going to claim 1,20,000 as deduction. DTR will say can't claim. Next comes your ATG. ATG allows you to claim a deduction of 100% of the amount deposited, which is 2 lakh rupees. So 2 lakh rupees will be deducted here, giving me a number as if it is 18,20,000 minus 3,20,000. Answer is 15 lakh rupees. Yes, whereas if I come to DTR, DTR is going to say 18,20,000 rupees. Agreed? Agreed. Very good. With that, people, I can now simply compute my tax. On the left side, for my tax of 10 lakh rupees, what is going to happen, people? In this, what I'm going to do, I'm going to say my LTCG is going to get ignored off. So my long-term capital gains is going to be ignored on both the sides, because it is less than 1,25,000. 112A says you cannot tax up to 1,25,000, giving me the balance income. What is my balance income on the left side? In the 15 lakhs, I'm going to reduce 1,20,000 rupees, which means my balance income is 13,80,000 rupees. Now, in this 13,80,000 rupees, for the first 10 lakhs, I'm going to tax at the rate of 1,12,500, because question comes and confirms the person is 42 years. Yes. Next, for the 3.8 lakhs, I'm going to tax at the rate of 30%. So 3.8 lakhs is going to be what? 3,80,000 at the rate of 30%. Answer is 1,14,000. If I add my 1,12,500 to this and I add a cess on this, my final answer is going to come to 235560. I have not put my cess. I know you can do it. Next is 18,20,000 people. What am I going to do for 18,20,000? I'm again going to say LTCG is 0. In this 18,20,000, I'm going to ignore 1,20,000 completely, which means I need to tax 17 lakh rupees here. Yes, how am I going to tax 17 lakh rupees? For the first 3 lakhs, I'm going to say 0. For the next 4 lakhs, I'm going to say 4 lakhs into 5 percentage. 4 lakhs into 5 percentage is going to be 20,000 rupees. Yes, so it is 0 to 3 lakhs, 3 to 7 lakhs, 7 to 10 lakhs, which means again 3 lakhs is going to be taxed at the rate of 0.510 percentage, which is 30,000 rupees. Then 10 to 12 lakhs, which is another 2 lakh rupees. 2 lakh rupees, I'm going to tax at the rate of 15 percentage, which is going to be 30,000 rupees. So it has become 0, 5, 10, 15, and then next 3 lakh rupees, 20 percentage, which is going to be 60,000 rupees. So 0 to 3, 3 to 7, 7 to 10, 10 to 12, 12 to 15, and then above 15 is going to be taxed at the rate of 30 percentage, which means I am going to take 2 lakhs and 30 percentage. Again, another number is 60,000 rupees. Let's check this quickly. 50,000 plus 30,000 plus 60,000 should give me 1,40,000. Yes, 1,40,000 has matched. 1,40,000 pay, another 60,000 is coming to me, which means 2 lakhs is going to be added to my computation statement. So I'm going to take 2 lakhs of my income, add the cess very directly. Cess number is 2 lakh 8,000. Cess number is 2 lakh 8,000. People, you itself can come and tell me which one is showing lower. Definitely DTR is showing lower. Yes, if my DTR is showing lower, I'm simply going to take my DTR and I'm going to claim my number as it is. Easy, easy, easy question. Yes, easy question, people. I think this is what an easy question should look like. This is the kind of questions that you should feel proud of to complete, clear, and go for your examinations. Now, if you are able to score 20 from MCQs, 7 has come in here. Let's see how much more can you score. Question says, I am RTP Limited, Kolkata, a domestic company incorporated and operational from May 2020. It has been assessed to tax as per normal provisions to the rate of 30%. The board of directors of the company wants you to take note of the following data and suggest whether they have to continue the same or opt for the provisions of section 115 BAB. The company's income from the business for the year ended 31st March 2025 is given as 1,500 lakhs before deduction of following items. Question says, should you go for normal regime? Should you go for special regime? Yes, we are in company format. Let's see which ones can I claim in normal, which ones can I not claim in normal. First one, question comes and says that I am going to have additional depreciation of 125 lakhs. People, will special regime allow it? No, which means if I am in normal, I can claim it, but if I am in special, I can't claim it. Next one, brought forward business loss of AY 24-25. Can I claim it? Yes, why not? Normal will also allow, special will also allow. Deduction under 80JJAA, can I claim it? Yes, I can claim it in normal also, I can claim it in special also, no challenges whatsoever. And then there is a deduction called ATM. Can I claim it? Yes, I can claim it in both. There is no challenge whatsoever, which means the problem is only on the additional depreciation part. Assess the total income and tax liability as per normal provisions and under 115 BAB and to suggest which one should be opted. I think the answer is fairly going to be straightforward. Yes, what is going to do? I'm going to take my normal computation. Let's take my normal computation directly on the calculator itself, people. My income has been confirmed as 1,500 lakhs. On this 1,500 lakhs, what am I going to do? I'm going to reduce 125 for my additional depreciation, 700 for my business loss, 50 for my 80JJAA and 25 for my. But one second, why do I have ATM? The question says the company's income from business before the year is 1,500 before deduction of following items. Why do they have to confuse you like this? People, section ATM is basically intercorporate dividends. Yes, and for an intercorporate dividend to happen, one thing is fairly important. The most important thing from an intercorporate dividend perspective is that you should have a dividend income offered. You don't even have a dividend income in the question. Where is the dividend income given in the question? With no dividend income given in the question, I would come and say, boss, this person is in the business income. They've only confirmed his business income to you. They've not even confirmed your IFRS income. When there is no IFRS income itself, how can you claim ATM worth of deduction? I'm going to say this is to be ignored of. Yes. Now, people, if ICMA does end up claiming this 25 lakh, then I'm really sorry. I don't know what is the right answer, but trust me, from an income from business perspective, there is no chance that you can claim ATM. ATM cannot be claimed from business income. It can only be claimed from your IFOS income. With no IFOS income in my hand, I'm not even going to claim this deduction. This is my personal opinion. I don't know what everything else is going to happen. Yes. So from my personal opinion, I'm going to say 1,500 lakhs is my income. On this 1,500 lakhs, I'm going to reduce 125. I'm going to reduce 700 and I'm going to reduce 50, giving me the normal income statement of 625 lakhs. Yes, so my normal income is going to be reported as 625 lakhs if I go for normal rules. 625 lakhs. Now notice carefully people, it's 625 lakhs. When it is 625 lakhs, it basically means 6 crore 25 lakhs. Now what am I going to do? I'm going to tax at the rate of 30%. Notice, because I am a domestic company with a turnover, with an income more than 1 crore and less than 10 crores will be liable for 7% surcharge. So add a 7% surcharge, add a 4% cess. The answer in my hand is basically the answer in my hand what? Answer in my hand is 2 crore 8 lakh 65,000. The answer in my hand is 2 crore 8 lakh 65,000. This is what the right answer looks like. Coming to the other side, if I'm going to go for 115 BAB, what am I going to do? I'm going to take my 1,500 as it is. In the 1,500, I'm only going to reduce 700 lakhs and I'm only going to reduce the 50 lakhs, giving me the answer as 750. On the 750 people, what am I going to do? I'm going to tax at the rate of 17.16. What is 17.16? 115 BAB says tax at the rate of 15% plus a minimum surcharge of 20% plus 4% cess. So directly 17.16% is my tax, which means the answer is going to be 1 crore 28 lakh 70,000. I don't even have to worry. The answer is obviously answer B. You're going to opt for new regime. You're going to opt for new regime. This is what the question should look like. Now, people, I do have a challenge on the ATM. I don't think ATM should be claimed, but yes, I don't know what the right answer is. To that extent, the answer may be different from what the such answers comes to. But nevertheless, beyond that, I think the answer was very easy, which means you should be answering question number 3 no matter what. Question number 3 should be the first question you should be attempting from your exam perspective. Yes, good. Then comes to question number 4. Question number 4 says, I am Tall Private Limited, Kanpur, an Indian company engaged in the manufacture of leather bags and synthetic bags through 2 business units. One is Unit A, leather bags, Unit B, synthetic bags. Management of the company has decided to demerge and sell Unit A to another Indian company by the name Salt Private Limited. The book value of assets minus liabilities of Tall Private Limited is 50 crores. Net worth has been confirmed to you. The book value of assets of liabilities of Unit A was 20 crores. What am I going to give? I'm sorry. Tall Private Limited is a total company. In the total company, I've decided to sell Unit A to another company. Okay. The book value of Tall, the complete company, is 50 crores and the Unit A is 20 crores, which means I'm going to sell off 20 crores of Unit A. I'm going to sell off 20 crores of Unit A. The date of demerger is confirmed as 5th June 2024. It was decided in the scheme of the demerger that for each equity share of 10 each in Tall Private Limited, 5 equity shares of Salt Private Limited of 10 each shall be issued. Sunil is a resident individual holding 15,000 shares in Tall Private Limited. He has acquired all the shares of Tall Private Limited on 4th January 2020 at the price of 150 rupees per share. He has received 75,000 equity shares of Salt Private Limited. 75,000. Oh, for 1 you're going to give 5. Yes, okay, fine. 75,000 shares are going to be given to me. He has sold all the shares of Salt Private Limited on 15th March 2025 at 20 per share. Cost inflation indexes are given to you. With appropriate reasons to support your computation, required to compute the capital gains in the hands of Sunil on the transfer of shares of Tall Private Limited and Salt Private Limited. Where am I transferring Tall Private Limited shares? It says he has transferred all the shares of Salt Private Limited on 15th March. This is weird. I'm assuming then when they say Tall Private Limited, then they're assuming that probably when I'm selling it and reacquiring more shares, that is what they're talking about. So capital gains is what they're being discussing on, is what my understanding is. Anyway, with that understanding, people, I'm going to go into the question. The question is basically saying I'm going to have a demerger happening, and when demerger happens, any kind of asset transfers will not be regarded as transfer. From the shareholders' perspective, what is going to happen is cost of acquisition is going to be split between both the companies in the net worth ratio. So look carefully what is going to happen. When I initially had shares, I had 15,000 shares if my memory serves right. Question said on the date of demerger, yes, Sunil was holding 15,000 shares which he acquired for 150 rupees. So cost of acquisition in the hands of Sunil, let's compute that first. So I had a cost of acquisition, sorry. So I had a cost of acquisition in the hands of Sunil, people. What was it? It was 15,000 shares at the price of 150 rupees. Tell me the computation quickly for myself. It is going to be 15,000 rupees into 150 shares. Answer is going to be 22,50,000 rupees. So 22,50,000 rupees worth of cost of acquisition I have. This 22,50,000 worth of cost of acquisition pertains to the complete 50 crores worth of Tall Limited. Yes, when the net worth was 50 crores, my cost of acquisition was 22 lakh 50,000. On the contrary, what is happening? I am now going to sell off 20 crores worth of my unit. So what happens if I sell off my 20 crores worth of unit? Income tax will say when 20 crores worth of unit is being transferred off to another entity, the corresponding cost also will be moved to that entity. Yes. So what am I simply going to do? I'm going to do 22 lakh 50,000 multiplied by 20 divided by 50. Answer is 9 lakh rupees. So 9 lakh rupees worth of cost is going to be transferred off to Salt Private Limited. Yes or no? Let's try this once again just for my convenience. So it is 22 lakh 50,000 multiplied with 20 divided by 50. Yes, 9 lakh rupees. So what is going to happen now, people, is that when it comes to this cost of acquisition, I'm going to say the Salt Private Limited order shares which I got. The Salt Private Limited order shares which I got is now going to be 9 lakh rupees. Is going to be 9 lakh rupees, whereas a tall company which is after demerger, is going to remain at how much? It is going to become 13 lakh 50,000 rupees. This is what the cost of acquisition is going to look like. Any doubts on this part? Yes. Now coming to the part of what happens to the capital gains in case of tall private limited, I'm going to say simply exempt, because anyway capital gains is not taxable. But coming to Salt Private Limited, Salt Private Limited shares has been sold off by the company. What price are you selling it off? You're selling it off at 20 per share, which means let's compute the full value of consideration. What is full value of consideration? I have 75,000 shares. So it is 75,000 shares at a price of 20 per share. This is what I'm going to sell it for. Answer is going to be 15 lakhs. Yes. Now, what is going to be the cost of acquisition? Very simple. Income tax says cost of acquisition will be the cost that you proportionately got for Salt. In my computation, I've already computed that the cost of acquisition is 9 lakh rupees, making me my capital gains of 6 lakh rupees. Making me my capital gain of 6 lakh rupees. Now notice carefully, people, the sale happened on 15th March 25, which is after 23rd July. Therefore, anyway, indexation rules are not going to be applied to you. But when it comes to the rules of period of holding, what is going to happen? Income tax says when it comes to demergers, the period of holding will start from the original or purchase of tall limited shares. So when I purchased it in 2020, I'm now selling it in 2025. So the purchasing period is going to be from 2020 to 2025, making me taxing this at the rate of long-term capital gains. Yes, now the question says it is private limited, therefore I'm going to say section 112. I'm going to say section 112. This is what the right answer will be. This is what the right answer will be. I hope this makes sense, people. Now, this was a manageable question except for the last line. I don't understand. When the question itself showed that they sold only shares of Salt Private Limited, I'm not sure why did they want to ask on Tall Private Limited. Probably test you on the fact that you have to write some English. The English being the fact that when it comes to capital gains on demerger, the capital gains will not arise in this transaction because at the end of the day, this was not regarded as transfer. I'm assuming all conditions have been satisfied. Yes, they're satisfying all conditions is what I'm saying. Nothing else has been violated. All conditions being satisfied. The Tall Private Limited shares are not going to be taxable. Salt Private Limited is going to take these shares at a price of the previous cost in proportionate terms, which means 9 lakh rupees got allocated to Salt. The balance gets allocated to Tall. Tall has not been sold off. Salt has been sold off. Salt has been sold at 15 lakh rupees. 9 lakhs to be reduced. Answer automatically becomes 6 lakh rupees of capital gains. Yes, yes. Now, there are some assumptions you're going to make in this question, but apart from that, I think you should be able to manage this question off. Clear? Good. 4B. 4B says, I am Aditya, non-resident Indian, employee of Global Limited UK, settled in UK. During the previous year 24-25, received a monthly salary of £12,000, which was credited to his bank account in UK. People, I am a non-resident Indian. Okay. He has acquired certain shares and debentures in Indian company in India by remitting foreign currency, and during the previous year earned a dividend of 1,50,000 gross and interest income of 4 lakhs, which was credited to his bank account in India. Apart from the above, he has purchased shares of 4 lakh rupees of X Private Limited by remitting foreign currency on 10th June 2020 and has sold these shares on 30th June 2024 before 23rd July for 5,25,000 rupees. He invests the entire sale consideration in the shares of another Indian company on February 2025. He has a let out property in India fetching a monthly rent of 20,000 rupees, which he was credited to his bank account in India. Cost inflation indexes are given to you. Assess the total income and tax liability of Aditya for 25-26 under Chapter 12A. Ignore the provisions of 115 BAC. Ignore the provisions of section 115 BSc and the pounds data is given to you. NRI taxation. I remember telling this in the class this year, people, you are expecting NRI taxation as a question. So be careful on that. Let's figure out a few things first of all. First thing to be kept in mind is that this person, my dear friend of Aditya, is a non-resident. When he is a non-resident and is working in global employee of UK, settled in UK, he received a monthly salary of 12,000 pounds, which was received in bank account in UK. It means this income is not taxable. Yes, as a non-resident, any money received outside India and credited to shares outside India, accruing outside India, not going to be taxable in your hands. You're going to ignore this number. Yes, good. The only things which I need to worry about right now are the balance income. So let's put all the incomes out. If I'm going to put my incomes out, people, question says I have a dividend income. Dividend income is going to be 1,50,000 to be taxable as it is. Yes, next I have some interest income. Interest income is going to be debentures from Indian companies. Again, debentures from Indian companies is also going to be interest income. Interest income is also going to be taxable as it is, 4 lakh rupees. Next, he has purchased shares of X Limited. Now, people purchasing shares of X Limited, question itself comes and says that the person is entirely investing the sale consideration in another company, which means I need to first check the period of holding. Income tax says that you need to invest the money within 6 months. If you have not invested the money within 6 months, you're going to lose the 115F exemption. Look, 30th June, I've sold it off, which means July, August, September, October, November, December. See, they tricked you. They tricked you because 15th February is what the purchase sale consideration has been, the purchase has been made, which means you have exhausted the 6 months cutoff. If you have exhausted the 6 months cutoff, you're not getting 115F exemption. So capital gains will be computed for you. What is capital gains, people? Capital gains, purchase is given as 4 lakh rupees. Sale is given as 5,25,000. So I'm going to take 5,25,000 worth of full value of consideration. I'm going to reduce my cost of acquisition of 4 lakh rupees, and my capital gains is going to become 1,25,000 rupees. 1,25,000 rupees is what my capital gains is going to look like. Any doubts? Question has asked me what tax liability also has been asked. Will I claim a 115 exemption? No, no exemption of 115F is going to come to you, because I did not invest within 6 months. Yes, that is what the fact pattern of the question is. Question says you are required to, oh, you also have a let out property, sorry. So let's tax your let out property as well. What is going to happen? I'm going to take income from house property. Question says I have income from house property of 20,000 rupees multiplied by 12 months, is going to be 2,40,000 rupees. 2,40,000 means 30% standard deduction. 1,68,000 is my capital gains, is my IFHP income. Now, how am I going to tax these people? I'm going to tax my dividends, interest, and capital gains and IFHP. IFHP, I can straightforward come and say nothing relating to chapter 12A, which means this is going to be taxable at slab rates. This is going to be taxable at slab rates. Because it is going to be taxable at slab rates, tax is going to be 0, full stop, because less than 2,50,000 worth of limit, and therefore slab is going to be 0. That is what the answer is. As for the dividend and interest, we're going to tax it at what? We're going to tax it at 20%. So this is going to be 20%. This is going to be 20%. This is going to be 10%, because it is before 23rd July. Because it is before 23rd July. Can I give indexation benefits? No. No indexation benefits in the whole NR chapter is what we discuss, people. Even if it is before 23rd July, you're only going to tax it at 10%, but not claim any indexation benefits. That is what the answer is going to be. So 1,50,000 by 20% kiya to 30,000 rupees. 4 lakh पे 20% किया तो 80,000 rupees, 1,25,000 पे 10% किया तो 12,500 rupees is what the answer is. If I take that numbers into consideration, what is going to happen? 30,000 rupees plus 80,000 rupees plus 12,500 is going to give me 1,22,500. On that 1,22,500, add a 4% cess, gives me the answer as 127,400. That's all. This is the question. 127,400 is the straightforward answer. Notice carefully, I'm a non-resident, people. Don't start asking Rahul rebate and all, will you get? No rebates and all for you. You are a non-resident, no rebates given to you no matter what. Yes, at the same time, people, can I use the benefit of Kaju Katli? Can I start exhausting my basic exemption limit against capital gains? No, none of that is going to happen, which means 1,27,400 is what my right answer is. This was an easy question. If you come and ask me, I would honestly come and tell you it's an easy question. The only problem with the question was probably that you did not realize 115F. If you have realized the fact that 115F is to be claimed after 6 months, is not to be claimed after 6 months, you have done an amazing job. Yes, that is the only thing that you have to keep in mind. Also, people, you could have itself realized dividends, interest, IFHP. You think for 3 incomes they're going to give you 7 marks. Obviously, they wanted you to test on capital gains, so they were smart enough. You should have been smarter. If you have figured out the answer, thumbs up to you. Yes, so this was an easy question. If you come and ask me, I should have been able to answer 4A and 4B for examination purposes. Should be manageable. Good. Can we go forward, people? Can we? Let's go. 5. 5 says, I am Matthew Cherian, a resident individual and a reputed surgeon. His assessment for assessment year 24-25 was completed under 143.3 by an order dated 15 September 25. Okay. He received the said assessment order and notice of demand on 25th September. In the assessment, the assessing officer has disallowed certain deductions and finally added 28 lakhs to the returned income. He filed an appeal before CIT appeals on 15th November as he was outside India from 1st September to 13th November 2025. First things, based on the above facts, what is the time limit for filing appeal? Time limit for filing appeal is 30 days from the date of demand order. 30 days from date of demand order. I received the notice of demand on 25th September. So which means 26, 27, 28, 29, 30. 7 days over. Yes, apart from that, I have 23 days. So within 23rd of October, I should have filed the appeal of. That is what the thing is. He filed the appeal on 15th November, which means he was filing late. Legal remedy, in case it is filed beyond this time limit, you can go and apply for condonation. If there are valid reasons to do so, you can go and apply it for a condonation. You can go and inform the CAT appeals that, sir, I was not available for certain reasons, and because of that, I would like some additional time limit from you. Third, time limit for disposal of appeals. People, unfortunately, there is no time limit for disposal. It says it is recommended for you to dispose it within 1 year, but it is not a mandatory thing, which means there is no time limit for you to dispose this case of. Whether any deposit of tax is to be made for additional income assessed by the assessing officer, it is required that you have to pay 20% of the disputed tax as an deposit. Yes, this is what a question is. Now, I know assessment procedure is not something which many people read and go for examinations. If you were able to answer this, great. If not, it's okay. Let's see if question number B was also pathetic enough and we could have ignored this as the second question for ignorance. Let's check. Fox Limited Nagpur Indian company engaged in the manufacture of electronics acquired the following assets. Machinery A, rate of depreciation, 23rd June 2024 from Healy Limited Raipur, a reputed manufacturer. It was put to use on 15th October by Fox Limited. Okay, some questions are given to you. What is the question wanting? Analyze the actual cost of each machinery as per ICDS. Calculate the depreciation. Okay, ICDS question, people. Look, interesting question. It says, machinery A, rate of depreciation is acquired on 23rd June 2024 from Healy Limited, a reputed manufacturer. It was put to use on 15th October, post Gandhi Jayanti, making you eligible for half depreciation. Consideration, Fox Limited has issued 10,000 equity shares in the company. The face value of these shares is 100 per share. Fair market value of the share was 150 per share on the date of acquisition of the machinery and 240 per share on 31st March 2025. Confusing you unnecessary. People, cost of acquisition will be the same price as what you have recorded in the books of accounts. I am going to issue 10,000 equity shares on a face value of 100. Fair market value is 150 shares on that date of acquisition. I don't care. I'm going to take this number. So it's going to be 10,000 into 100. No question says that it's premium, which means the answer is going to be 10,000 into 100. This is my cost of acquisition. Simple, straightforward. Don't worry about everything. Yes. Next, fair value of the machinery acquired as on the date of acquisition 23rd June was 20 lakh rupees. A valuation report of the approved valuer is available on record for determining the fair value of the machinery. Okay. Installation cost incurred for the machinery to bring it into working condition was 5 lakh rupees given to you. 5 lakh rupees to be added to the cost of acquisition, mandatory to be added to the cost of acquisition. Next, machinery B, rate of depreciation is imported as second hand machinery. People, am I in manufacturing? Yes, I'm in manufacturing. Be careful. I need to claim additional depreciation, which means I am not just going to claim 15% people. I'm also going to claim additional depreciation of 20%. So 35% depreciation should have been claimed, but only half can be claimed. So it is 35% into 50% here. Into 50% here. That is what the answer will look like. Next, imported a second hand machinery, which means I'm going to import from outside India. Additional depreciation is not allowed as deduction. On 18th October 2024, post 23rd July, put to use on 1st November, again post 23rd July, consideration is $40,000, paid $35,000 on 18th October 2024, exchange rate is given as 82. The remaining amount of $5,000 was outstanding as on 31st March 2025. 43A comes and says you cannot do any kind of foreign exchange gain or loss on machineries, which means whatever remains pending in the subsequent time when you pay it off, that will get added to the cost of acquisition. Customs duty was 4 lakh rupees, installation charges was 1 lakh 50 paid, all those will be included. So I'm going to include 5 lakh 50,000 here. Yes, cost of acquisition will be what, people? Cost of acquisition will be 40,000 rupees into 82 rupees as it is, which means 32 lakh 82,000 will be 80,000 will be included as it is. These two numbers will be taken as it is, and you will be multiplying at the rate of 15%. At the rate of 15%, this is what the question will do. Yes, now again, if you come and ask me, this is where you could have gone wrong. Many things, too many things. 43A you don't remember so much well, and the question on this weird thing, adjustment of your FMB computations and all, I would say question number 4 directly to be skipped off. 4A, sorry, 5A, 5B, yes, choice, I would not prefer you to write it off. So which means I've already decided question number 2 and 5 is what I'm going to skip off. Yes, good. 6A comes and talks about exemption method, credit method, and tax sparring method. We discussed about it, people. DTAA comes and says there are 3 kinds of method: exemption method, your credit method, and tax sparring method. Exemption method is when basically you will say if it is taxed in that country, you will not tax it in this country itself. Your credit method comes and says that if you are going to tax it in that country, you will also tax it in the resident country but claim a relief based on section 90 or 91. And third one comes and says tax sparring method. It means that even if the income was exempt in that country, you'll get so much of credit of that country in this country so that you don't have to pay tax on that in India as well. That is what tax sparring method says. Simple English, people. A repeated question of CMA final. You could have easily scored marks in this. Should have been written. Next, 6B comes and says Anand is a resident individual, age 55 years, CEO of ACE Limited Chennai, furnishes the following particulars earned by him. DTAA question, let's check. India has not entered into any DTAA with country Z. Fiscal year is the same as income tax in country Z. Country Z rate is given as 20% on all incomes. Income tax was paid by Anand in country Z on 25th May. Doesn't matter. As long as you have paid the income before the return filing due date, you can claim it as deduction. You can claim it as deduction. Correct? Yes, very good. Which means in this case, people, what am I going to do? I'm simply going to take my computation and let's finish the answer of. Wait, by the way, exchange rates are given to you. Exchange rates of Indian currency as per 1 USD and reference rate of RBIs are given to you. Analyze and assess the income tax and total income payable by Anand for all assessment years under default tax regime, assuming that he satisfied all the conditions. I need under default tax regime. DTR. Facts. Question says, I have salary from ACE Limited. I have salary from ACE Limited. Now, I don't know, understand this question, people. When they say salary from ACE Limited, does it mean that it is after standard deduction or before standard deduction? I will assume this is before standard deduction because, again, DTR, amendment of current year, I'm sure CMA wanted to test you on that. Yes. So, by that logic, I'm going to say that in my particulars, what is my salary going to be? My salary is going to be 24 lakhs minus the amendment of current year, which is 75,000 rupees. Yes, so 75,000 rupees worth of deduction is going to be reduced off, which means 23 lakh 25,000 is what is taxable. Good. Next one says loss from self-occupied property because of interest on housing loan. Ignore. I am in DTR. DTR may not allowed. DTR may not allowed. Question says DTR. Yes, I'm going for DTR. Not allowed as deduction. Ignore. Interest on bank fixed deposit to be taxed fully. 1,50,000 is going to be added. Next, income from business in countries at 15,000 rupees. Now, here is where the problem starts. People, question has not even clarified where does the business look to. Let's look at the foreign tax credit rules. I'll show you the foreign tax credit rules, people. Let's see if you're able to understand the foreign tax credit rules. The foreign tax credit rules are a little difficult to remember, but if you have remembered it, then amazingly well. You could have got the easiest answer here. Yes, if I have to show you the foreign tax credit rules, that is going to be part of my DTAA chapter. Yes. So, foreign tax credit rule says that when it comes to PGBP income is going to be taxable on the last day of the previous year. Take the exchange rate on the last day of the previous year. Capital gains is going to be on last day of the month, immediately preceding the month. Yeah, immediately preceding the month. Dividends is also going to be last day of the preceding month. PGBP is going to be last day of the month preceding, which means in simple words, salary last day preceding, IFOS last day preceding, any kind of dividends last day preceding, capital gains last day preceding, anything else will be last day of the previous year. That is what the question says. Let's do the computation accordingly with that. Yes. So what am I going to do? I'm going to check my PGBP. PGBP has not been confirmed. I don't know the date. I'm going to take the last day of the previous year. People, what is my previous year? 24, 25. 24, 25, yes, 24, 25, 31st March 2025 is what I want. 31st March 2025 gives me 75 rupees. 75 rupees is what is going to be my computation module, which means I'm going to take my business income of 15,000 and going to multiply with 75,000. Answer is 11,25,000. So 11,25,000 will be added to my PGBP statement. This is OS and this is PGBP. Yes, now I'm going to mark this, people, because this is my double tax income. This is my double tax income. Next, royalty income from country Z of a fictional book due and received on 10th April 2025, not eligible for deduction under 80 QQB. Question itself has come and told you you're not eligible under 80 QQB. Makes your life easier enough. It says I have received it on 10th April 2025. Again, people, no mention whatsoever. Take the last day of the previous year. Last day of the previous year is going to be 75. Unless TDS would have deducted, I would have taken a different number. So it is still going to be last day of the previous year, which means number is going to be 10,000 rupees into 75. Answer is 7,50,000. Yes. Next, long-term capital gains on sale of shares of companies registered in country Z. Sales proceed was credited in bank account held in country Z on 20th March 2025. I need 1 month before. 1 month before of 20th March is going to be 20th February. 20th February is 74.5. So 20th February is what I'm going to take. 74.5 is what I'm going to take. So it is going to be 6,000 into 74.5. Answer is 4,47,000. This is also double tax. This is also double tax. This is what the question says. Yes. Now, people, what is the sale of shares of company registered in country Z? Country Z means this is 112. I cannot take it as 112A because it has to be listed in India for that. Yes. So 112 is what I'm going to take, and it is 20th March, which means it is posted 23rd July. This is what the fact pattern is. With this, I can simply compute my tax liability. Help me out quickly, people. I'm going to take my OS incomes, which means I'm going to take my slab income first. Let's do my slab income. So 23,25,000 plus 1,50,000 plus 11,25,000 plus 7,50,000 is going to be 43,50,000. In this 43,50,000, I'm going to ignore 15 lakh rupees and I'm going to tax at the rate of 30%. Plus, I'm going to add 1,40,000 to that income statement, which means number is going to be 9,95,000. So on my slab, I'm going to pay a tax of 9,95,000. On my 112, I'm going to directly tax at 12.5%. So take 4,47,000 into 12.5%. Answer gives me 55,875. Adding both answers together, I get 9,95,000, which is 10,58,75. Yes, doesn't, am I increasing my, am I going more than 50 lakhs? 23,25,000 plus 1,50,000 plus 11,25,000 plus 7,50,000 plus 4,47,000. Luckily, people, I'm not touching 50 lakh surcharge, which means I'm going to directly add cess. So 10,58,75 plus 4% cess hits a number of 10,92910. It's a number of 10,92910. This is going to be my answer, which means I'm going to do step number 1, compute the average tax rate. 10,2910, 10,92,910 is going to divide by, I just missed the number. Once again, 23,25,000 plus 1,50,000 plus 11,25,000 plus 7,50,000 plus 4,47,000. Answer is going to be 47,97,000. Yes, so help me out, people. What is going to happen? Divide equal to multiply with 10,92,910 into 100 gives me the answer as 22.7%. So my India tax rate is going to be 22.78%. My foreign tax rate is given to me as 20%. I'm going to take whichever is lower, which means the answer is straightforward, 20%. Now 20% on my double tax income. So take my double tax income, which is 20% of what and all incomes do I have? I have 11,25,000 plus 7,50,000, 4,47,000. plus 4,47,000, which means answer is 23,22,000 multiplied by 20% is my credit. Answer is 464400. 464400 is my answer, giving me the Total tax liability as 10,92,910. Answer is 628510. This is my tax liability. This is my tax liability. Yes or no? Yes or no? Yes. DTAA is good to this extent, people. The only thing which you could have probably gone wrong is on the rate computations. If you knew the rate computations, then great. If you have not known the rate computation, this is where you could have gone wrong. You're not going to take the last year's rate. You're not going to take the March rate. You're not going to take the 10th April. You're not going to take the 30th April. You're going to take the 20th March and the 31st March. These are the two rates that you have to keep in mind. If you have done that properly, then you will get the right answer of yes. If not, yes, unfortunate enough, this question can also go wrong to that extent. That gives me two more questions. Let's check the two more questions. Question number 7 says Real Limited in Mumbai is an Indian company in which Real Inc., an Italian company, has 27% shareholding. The moment I saw 27%, I said to myself, this is going to be an AE because it is holding more than 26%. Real Limited is engaged in importing and selling mobile phones manufactured by Real Inc. Real Limited is importing machinery and selling mobile phones, which means Relink also sells similar mobile phones to other related parties by the name YOLO Limited. The following details are provided to you. The number of mobile phone handsets sold to Real Limited by Real Inc. during the year is 50,000 units. The number of mobile handsets sold to YOLO Limited by Real Inc. is given as 55,000. People, looks like I'm following cup method. Price charged for sale made to Real Limited is 25,000. Price charged to sale made to YOLO Limited is 20,000 rupees. Real Link did not provide any warranty to Real Limited. However, Real Link provides a warranty of 3 months to YOLO Limited. The cost of warranty is 3% of sale price for 3 months. Determine the arm's length pricing of the transaction and effect of that on the total income. First things, people, looks like resale price method, but unfortunately they did not tell me my sale to unrelated parties, which means I'm going to follow cup method. So first things you have to know, determine the arm's length pricing, people. What will I do? Always rule number 1, start from the third party pricing, which means my third party pricing is what I'm going to take. My third party pricing is how much? I'm going to charge third party 20,000 rupees. I'm going to charge third party 20,000 rupees. Now, question comes and says that Real Inc. does not provide any warranty to Real Inc., but Real Inc. is providing warranty to 3 months to YOLO Limited, which means YOLO Limited has been charged extra for the warranty. Correct, not correct? If they're going to charge extra for the warranty and my group company has not been charged that warranty, then YOLO Limited is going to receive the price at a higher rate. I should now bring it down. BRS scheme, what comes and says third party has been charged higher, group company has been charged lower, which means bring it down. So I'm going to minus. What am I going to minus? I'm going to minus 20,000 into 3%. 20,000 into 3% becomes 600 rupees. I'm going to minus another 600 rupees, which means answer is going to be 19,400, which means my arm's length price is 19,400 rupees. Yes. Understand once again carefully. My group company has not been given warranty, but my third party has been given warranty. Third party ko I would have charged more. If I'm going to charge more to my third party, but I'm not going to charge that money to my group company, then my third party is showing higher price. If my third party is going to show higher price, I'm going to bring it down. If I'm going to bring it down, I'm going to reduce, which means ALP is 19,400. I have sold it to my group company at 25,000 rupees, which does not make sense. When everyone else is buying it at 19,400, why should India buy it at 25,000 rupees? If India is buying at 25,000 rupees, India is going to make more losses, which means 25,000 rupees minus 19,400 is going to be 5,600 rupees per unit of ALP adjustment. How much units did I sell? How much did I buy from Real Limited? 50,000. So into 50,000 units has been bought, which means 5,600 into 50,000 units has been bought, which means if I have to see the number, it is 28 crores. So 28 crores worth of ALP adjustment is going to happen. Yes, effect on total income is I'm going to add 28 crores in the statement of Real Limited. Real Limited is going to take an adjustment of 28 crores. I think this was an easy question. Should have been easily been able to answer it off. Should not be any difficult whatsoever. Yes. So what do you need to write in the question, people? You need to come and say, first of all, 26% breached, and therefore this is an associated enterprise. After an associated enterprise, you need to come and say that this is a cup method transaction. Now, in that cup method transaction, you need to come and say, because my third party has been charged warranty, third party pricing is showing higher, third party pricing has to be brought down, and therefore third party pricing has been brought down by 19,400. ALP became 19,400. Group company is being charged 25,000. Difference of that is 5,600. For 50,000 units, that becomes 28 crores. Effect of transaction is add of 28 crores. Good. Last. Anita Limited is an Indian company engaged in manufacture of electronic goods for export as well as domestic consumption. Raw materials and consumables required in production amounting to 90 crores was imported from Europe. Out of this goods for 82 crores was supplied by Allen GmbH Germany. People, Anita is buying goods, raw materials is required for production, 90 crores was imported from Europe, 82 crores is coming from Allen. Rule comes and says if the supplier is going to give you more than 90% and he can influence the price, then they become an AE. Check karo, 82 divided by 90 into 100 gives me about 91%, which means supplier is providing me more than 90% of my raw materials. In financial year 24-25, Anita has raised the following loans and borrowings. On 1st June 2024, Anita raised a loan of 50 crores from Allen GmbH at an interest rate of 9%. The loan is repayable over the holiday period of 2 years. On 1st August 2024, she raised the loan of 20 crores from Bank of Tokyo, Mumbai at an interest rate of 7.5. Loan is guaranteed by Andrew Limited, which is holding 30% of the equity share capital of Anita Limited. People, loan is guaranteed completely, which means more than 10% of the total borrowing. If it is guaranteed by a group company, then that group company becomes my AE, which means this Andrew Limited is now going to be called as my associated enterprise. Interest paid payable to Bank of Tokyo for the year was 0.9 crores. Okay. Net profit reported by Anita for the financial year is 4.80 crores after debiting the interest on borrowed funds, depreciation of 2 crores and provision for income tax of 2.05 crores. Discuss the applicability and the provisions of limitation of interest deductions to various borrowings of Anita Limited. Analyze the amount of interest eligible for deduction of assessment year 25-26. Facts are fairly clear. People, what is happening? 94B rules have been checked with you. 94B has two things to be kept in mind. One is that you should not pay interest more than 1 CR. If you're going to pay interest more than 1 CR, then I'm going to have a problem. Look, how much interest have I paid? In the current year, I've paid an interest of 0.90 crores to that company, which is to be included because my group company is guaranteeing the loan. Second, if I'm looking at the previous one also is coming and saying what? Take a loan of 50 crores. 50 crores is going to be taken at a loan of 9%. But notice it is not from April, it is from June, which means April and May I was not having it. So it is 10 by 100, which means 0.45 crores. So 0.90, 0.45 adds more than 1 crore and therefore 94B rules will apply. With 94B rules applying, people, I need to now come and apply for 94B conditions. What are the 94B conditions? 94B conditions basically come and say that you should not pay more than 30% of your EBITDA. Yes, so what is happening? I need to first find my EBITDA. Question comes and says my net profit is given as 4.80 crores. Let's add back things. Add back your interest. How much interest am I going to have? 0.90 crores from this company and 0.45 crores from the other company, which means 1.35 crores. Next, add back what is called as your depreciation, which is 2 crores. Add back your tax, which is 2.05 crores. Can you give me my number? It is going to happen as 4.80 plus 1.35 plus 2 plus 2.05. Number is 10.2. Yes, so 10.2 crores is going to be my EBITDA. With 10.2 crores being my EBITDA, I can only pay up to 30% of this, which means I can pay up to 3.06 crores. I have what? Yeah, this should not be a problem. No, I don't see why is there an issue. 4.08, 0.9, 0.9, 50 crores into 9% into 10 months. Yeah, 3 point, no, one second, what, sorry, 50 crores into 9% into 10 by 12. 3.75 is coming into picture. Oh. Once again, people, let's check this carefully. Look, first one, it says 50 crores. 50 crores will be multiplied by 9%, will be multiplied for 10 months. Answer is 3.75. I don't know why I wrote 0.45. Answer is 3.75 crores. Yes. Should I be checking for the other one also? It says 20 crores ka transaction limit, 7.5 is the interest rate, multiplied with August, September, October, November, December, January, February, March. So 6 and 8 months. 8 divided by 12. 1 crore. I don't know why it's coming. I don't know why it's coming 0.9, but it's 1 crores. Anyway, whatever it is. So it is going to be 3.75 plus 9. It is going to be 4.65. Now let's check this once again. It is going to be 4.8 plus 4.65 plus 2 plus 2.05. Answer is going to be 13.5. Yes, so 13.5 crores is my EBITDA. 13.5 crores mein 30 percentage if you are going to take, you are going to get the answer as 4.05. So you can pay interest only up to 4.05. You have paid an interest of 4.65, which means you have an extra interest paid of 60 lakhs. You have an extra interest paid of 60 lakh rupees, which is going to be disallowed under section 94B. Which is going to be disallowed under section 94B. This is what the answer is. Yes. Now, if you come and ask me, I think 7A and 7B should have been easily been able to manage it off. If you have read transfer pricing a little more carefully, you should have easily been able to answer this question off. It just had too many datas in my hand. Yes, so you just had to write the facts properly, people. 2-3 facts you have to write. First is that when it comes to the first interest, Alan GmbH is supplying more than 90%, therefore they are an AE. Any loan given to them will be transacted as international transaction. The number was 3.75. On coming to the Bank of Tokyo, because it is sponsored by Andrew Limited, 0.90 will be considered there as well. So 4.65 will come from there. Total interest has gone more than 1 crore and therefore you are liable for 94B. With 94B applicability coming into picture, all the numbers added, 13.5 crores is what my EBITDA is. 30% of that becomes 4.05. Paying 4.65 is not allowed. You can disallow 60 lakh rupees. This is the amount. So what is the amount of eligible interest? The answer is only 4.05. I can only claim 4.05 crores as a deduction. This is what the answer is. I think people, you should have definitely answered 7. You will still not go to other questions. 7 is the right answer to try. Yes, that leaves me with the last question. Let's see if you're able to answer the last question. Question says, I am XYZ Limited, Surat domestic company furnishing the following particulars. People, total income question. Total income question. Oh, no, not total income question. Question says book profit. Oh, ho. This is asking for MAT computation. MAT computation is what the question wants you to discuss. So let's discuss MAT computation then. It says XYZ Limited net profit is 126 lakhs. You're going to look at each item and discuss whether you should disallow it in book profit or not disallow it in book profit. First one says expenditure of CSR, ignore. No computation like that in MAT computation. You're going to ignore it off. Provision for doubtful debts, disallow. Any uncertain liability not taken. Depreciation debited of 12 lakhs, which includes 2 lakhs being revaluation. I will disallow only 2 lakhs. Loss on sale of fixed assets, ignore. Deferred tax liability to be disallowed. Provision for GST 7 lakhs due for March, remaining unpaid till the due date of filing return, ignore. 43B is not an adjustment under MAT computation. Next, income from agriculture in Andhra Pradesh, people, section 10 exemption will be granted, therefore minus. Profit from unit in SEZ eligible for 100% deduction. 10AA is not an exemption, it's a deduction. Because it's a deduction, I will ignore, leave it as it is. Royalty income by allowing its patent to be used for Apex Limited, eligible for 115 BBF. People, if I have any income from 115 BBF, it is taxable at a rate of 10%, which is less than 15%. Therefore, I need to reduce it. It is like exempt income. Dividend received from foreign companies to be ignored, to be taxed as it is. Depreciation as per Income Tax Act, ignore. Brought forward loss as per books can be reduced off. Brought forward loss as per unabsorbed depreciation is 10 lakhs, ignore it off, because unless you are in insolvency, it is not whichever is lower, you are going to take, it is not total, it is whichever is lower. Since it is 8 lakhs or 10 lakhs, I'm going to take 8 lakhs. There is unabsorbed depreciation of 7 lakhs and brought forward business loss as per Income Tax Act, does not matter. Does not matter, which means this is what your book profit computation is. I think easiest question, people. If you've done MAT computation properly, easiest question you could have answered this question. No rocket science in this question whatsoever. You could have easily found your answer, people. And that too, the question only wanted book profit. They don't even want MAT tax. They have not even asked you for what is the MAT tax, so it does not matter at all. Book profit alone is asked. Simple plus and minuses. You could have got easily 7 marks in this question. Definitely worth attempting. Next, state with brief reasons whether the following independent transactions are international transaction or specified domestic transaction or regular business transaction, which means neither international nor STT. First says, C Limited Delhi has received 28 crores from its UK-based parent company for export of cloud-based services. UK-based parent company. Parent itself means that it's a group company. Group company means it is an international transaction. AB Limited, Jaipur received 26 crores for purchase of electronic devices from its subsidiary company located in SEZ, Gujarat at a price of 20% more than the market price. People, the moment you are going to include SEZ into consideration, SEZ is eligible for 10AA, STT rules will apply provided the transaction value exceeds 20 crores. 20 crores has been exceeded, so STT will apply. STT will apply. Next, EF Limited, Chennai has sold power generated to its holding company located in Mumbai at a premium price of 130% and the amount being 7.8 crores. People, look, no, the one entity is in Chennai, the other entity is holding company located in Mumbai. Both the entities are in India. When the entities are located in India, it has nothing to do whatsoever, which means I'm going to ignore it off. Unless you're going to come and tell me that this is some special deduction under heading C. I don't think so. Solar power and all is not confirmed anywhere else. Therefore, it is not going to be an international transaction nor going to be an STT transaction. You may sell it at a higher price. That's a different conversation for assessing officer to worry. Transfer pricing will not talk about it. TDP Limited, Cochin has paid 33 crores to SSP Limited, Mysore for the raw material purchases. SSP Limited is taxable under section 115BAB. 115BAB is notified as a specified domestic unit. The transaction was at cost plus 30% for SSP Limited, who sold cost plus 10% to other parties. In both the companies, Amal is a managing director and 100% of the shareholding in both the companies are held by Amal and his family members. Group companies, STT, more than 20 crores, straightforward STT rules will apply, fully treated as an income. Yes, this is what STT rules will apply. Easiest question whatsoever, easiest question if you come and ask me. Yes, and this ends the paper, which means, people, there are some loopholes in the chapters. There are some questions which are vague, there are some questions which are weird, but overall, if you come and ask me, this paper was worth clearing. There is no difficulty in the paper whatsoever. If you ask me, no matter what, I would have itself started with question number 8 first itself. Book profit and STT, easiest questions to have answered. 7 and 714 guaranteed for you. 94B could have taken additional time for you, but nevertheless, you could have still attempted question number 7. Let's approximately assume out of 14, you were able to score 8 or 9. Good enough. 22 marks guaranteed there. DTAA, yes, I agree. 6 was difficult because you had to remember the exchange rates. But other than the exchange rate, this question was manageable because A was anyway answerable. The English, the theory question is something which has come so many times, and I'm sure you would have answered it from your end, which means that was an easy answer question. 7 plus 7, 14. Assuming 7 got in that hand, 29 guaranteed. Then comes your question number 5. I think question number 5 is what I told you to ignore off. So if you've ignored question number 5, that's gone. Question number 4 is what I thought is easy. Yes, NRI question, people, easiest question. If 115F is one mistake you made, then fine enough. But other than that, 115F, demerger was an easy question. 115F probably made a mistake. 10 marks, done. 22, 42 is done. Then comes your question number 3, easiest question. Question number 3 could not have been made a mistake. Not even one single question can go wrong, people. Easiest question that has come in exam, except for this one part of the ATM. That one issue alone can be making a challenge, but other than that, you could have easily scored full marks in this. Again, 40 plus is already done here. With 40 plus coming out of this, question number 2 is what I asked you to skip off. So 42 came from here. 20 marks you're able to score in the MCQs. At least 20 marks worth of MCQs were easy. I don't see a problem here, which means exemption was already guaranteed. Yes, with this, I don't think you could have failed in the paper. But yes, if you still felt the paper was difficult, you probably made one mistake of realizing the tougher questions. You went into the tougher questions first. You looked at the question number 2, you looked at question number, I don't know, maybe, yeah, this question, where is that ugly question, the ugly question of profit split method and all, and you started coming and asking yourself difficult. If that happened, then probably you made a mistake. Question number 2, you started charitable trust. I did not read for syllabus, it's gone. Yes, no, people, that's what the 15 minutes is given to you for. The 15 minutes which they give you at the start of the examination is for you to realize which questions you could have answered off, and if you had taken that peace of mind to look into it, you would have realized that the paper was actually not difficult. If you ignore the tougher parts of it, the paper was enough for you to score an exemption. Yes, but again, if it does not happen that way, and if you still feel after this review that you need to prepare a little bit more, let's start early. Take some breather, people. I know it's December, so therefore take a breather, go for holidays, enjoy New Year's and come back. And when you come back in January, start a little early, because June 2026 unfortunately will have amendments for you. You'll have amendments to be read upon. While yes, there are not very significant amendments from your December examination to June examinations, but there are some things to be kept in mind. So if you can take that initiative from your side and finish it off, then it will already be good for you. But for those people who have done the paper to a reasonable extent, Stay confident. Leave it to the examiners to come back and let you know what the results are. Until that time, don't pay too much attention to it. Enjoy your period, people. If you have any other group pending for examinations, go with that. Complete that group also and focus on becoming a CMA finalist as soon as possible. Yes, good. I have completed the paper review in 1 hour 30 minutes, which is almost half the time of what your paper was. I know it'll take some time for you to think about it. It'll take some time for you to prepare the paper properly. But other than that, I think the paper was manageable, definitely, to that extent. So yes, if you have done it and if you've done a good job in the paper, a big thumbs up to all of you. If you have any doubts, if you have any clarifications, my comment box is open. Please feel free to write it in the comment box. If you have any further concerns and difficulties and you want to understand something from me, you can always WhatsApp me on my number on 733 8923295. Please drop a WhatsApp message with your query, people, and I'll try my level best to respond as early as possible. Now, whether this is December 25 or it is June 26, it does not matter. Any students going to appear for the future examinations also, feel free to message me here and ask any queries, and I'll be happy and glad to support all of you. Until such time that we discuss once again with any further doubts and clarifications, here is Rahul signing off for today. Take care, everyone. Bye bye. Merry Christmas and a very, very happy holidays to all of you. 2025 must have been a great year for all of you, but if it was not, don't worry. 2026 is coming with a lot of bangers for all of you, and it's definitely going to be the year that you're going to cherish for your life. Have that positivity to all yourself and enjoy this time along with your family, friends, loved ones, and any other person that you really want to look forward to. Take care. Bye bye.